Hi, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday, the 13th of February. The handover that we've got from these Asian trading hours has been fairly disappointing. Certainly, the European stock markets are all lower. There's been a bout of profit taking that I think you can agree after 5 or 6 days of gains is not necessarily to be unexpected. However, the news overnight from Asia was fairly disappointing. Certainly, the Australian unemployment pushing to a decade high put pressure on the Aussie dollar. That has certainly hit risk appetite, and also with the Japanese yen strengthening as well, which has pulled dollar yen lower. Has also been a bit of a disappointment as well. So that's hit sentiment in European trading hours. However, the euro and the sterling, which were certainly sterling was so strong yesterday, but euro has rebounded, and that has come on the back of the German inflation data that has come in bang in line with expectations at 1.3%. That has reaffirmed, you'd argue, Draghi's view that the Eurozone is not facing a deflationary environment, and certainly that has helped that suggestion and also strengthened euro on the back of that. So that's a positive for the Eurozone today. The things that you need to be looking out for today: US retail sales at 130 will have an impact on the dollar, but also you've got Janet Yellen giving her second testimony to Congress, this time to the Senate Banking Committee. I wouldn't expect anything groundbreaking, and certainly nothing that she came out with on Tuesday's rather comprehensive testimony that she gave before the House of Representatives. So I wouldn't expect a great deal of impact this afternoon to the dollar, but the outlook today is certainly looks to be a bit of disappointment and profit taking for the stock markets, but also a fair bit of positivity actually surrounding the euro and the pound. My chart of the day I'm going to go for is silver. Certainly, gold has been a very strong chart and breaking higher to 3-month highs, breaking that base pattern. But silver actually is lagging that move. It's been disappointing. Failed underneath that 2050 resistance band, which has been in place for several months now. And it looks to have fallen over once more. 2038 was the high it hit yesterday, and you've got this 9-day uptrend here in place, and that's now being threatened. You've got the momentum indicators rolling over. The MACD, certainly the MACD is not all that positive. The stochastics are threatening a crossover buy signal, which would be the second one, following on from that one that we got back, or the two that actually you've got in January, that both precipitated a bit of a decline. So that's what I'll be looking out for there. And if you look on the intraday chart, you'll see that that broken, or that that uptrend that has been really tested and looks to now be under real pressure. So just be careful for that in the next few hours. I think these momentum indicators are pretty disappointing considering the uptrend that you've had. And stochastics falling oversold. Into bearish configuration, but also their RSI falling as well. So I'm a little bit concerned by this falling also below that 89-hour moving average is not all that positive either. So I'm getting a little bit concerned with this rally, and I certainly think that if there were to be a breach of that 2006 low, which would open the 1990 low, then just be very careful. Certainly that would suggest, I think, below 1990 would certainly suggest, I think, that the trading range that we've built up over the past few days would have been built up and continuing, and a disappointment would drag that even lower back within that trading band, I think. So that's the silver chart. I wish you good luck with your trading, and I will speak to you later. Thank you.